Hey, what is going on, everybody? Welcome to another episode, The Rapid Review. Appreciate everybody joining live. Sorry I didn't get to give everybody a heads up this week. A little bit crazy of a weekend, but here we are. So yeah, everyone joining live. Chat is open. If you have any questions, comments, just want to say what's up, feel free to drop that there. We're breaking down, as always, overall market, leading themes, industries, looking at some charts, looking at any stocks that you guys want. So drop those in the comment section. Without further ado, it is time for the rapid review. All right. As always, there's a disclaimer. You guys know the deal. This is not financial investment or trading advice. Informational purposes only. Read through that. All right. Starting off, uptrend, power trend, currently still intact. As we go into next week, looking at distribution days, we have 6 distribution days on the S&P, 4 distribution days on the NASDAQ. So we look at the tracker, which you see up here. You got the stolen day on 10/28, which is why that is in black. But looking at what kind of went on during the week, on Thursday, which was the 13th, we gained that distribution day on the on the S&P, and on the NASDAQ we gained 2 distribution days. One on Wednesday, which is on the 12th, and one on Thursday, which is the 13th. So we went from 2 to 4 on the NASDAQ and from 5 to 6 on the S&P, gaining distribution this week. Looking at the next week, this 10/16 day is going to fall off when it reaches 25 trading days. So we'll see that count drop to 5. Other than that, though, really not likely that we are going to see any other distribution days drop off next week. None are going to happen due to time, and not very likely we'll see any drop off due to price action. Hey, what's going on, Chad? So yeah, let's go into current state of the market. Looking into what happened this week, the S&P was flat, basically up 0.08%. Nasdaq's down a little bit, down 0.45%, and the Dow up slightly, up 0.34%. For the year, S&P up 14.49%, NASDAQ up 18.59%, and the Dow up 10.82% for the year. Looking at the moving averages, a big thing this week, we're seeing us continue to hold the 50-day simple moving average, very, very tight on the NASDAQ, slightly above on the S&P, and a good distance above on the Dow. But still, again, below that 10-day simple moving average, below that 21-day EMA. Not positive to see this, especially to see when we look at the charts how we're chopping around in that area. But positive to see us in that 50-day simple moving average continue to hold over there. All right, let's jump over and take a look at what is going on with the indexes. We'll start off, as we always do, as the NASDAQ on the daily. All right, let's see. So starting off, I just want to say, look, we're not here to call the top. We're not here to call the bottom. I've said this a couple times, but I really, really want to reiterate this because that is just how we are as trend followers. Nobody knows if this is the top. Nobody knows if this is the bottom, and we're going to continue to rally up here. All we're going to do is just look at the information that we have in front of us, draw some lines in the sand where we need to change how we're acting, and just know how we're going to reduce or increase the exposure and the type of approach we're going to take going into the market next week. So with that said, though, starting out this week, it kind of went as expected, right? We pulled into the 50-day not this past Friday, 2 Fridays ago. We made that intraday test, but we had that kind of upside reversal close positively. So we kind of expected that we'd see that continue going into next week with your usual Monday morning gap ups, and we saw literally exactly that. We gapped up above the 21 EMA, and then we kind of rallied, closing in the high of the day. Things looking positive, looking like this kind of quick shakeout. Yeah, so decent start to the beginning of the week. Tuesday and Wednesday, we saw that kind of sideways choppy action. We still held above that 21 EMA, but we kind of just chopped around that 10-day simple moving average. Overall, going into Wednesday, this was fairly positive. I know we did gain a distribution day because we were down with a volume higher, but volume wasn't that high in general. So for this, really what was going on here wasn't overly concerning to me. And in fact, I was kind of happy to see us gap up, find that support, and then kind of trade sideways, hopefully digest that big move off the bottom or possible bottom, and then see if we can kind of find a way to find support here and then bounce higher. That's not what we got though. Thursday, market rolled over throughout the day. We broke below that 21 EMA. We intraday broke the 50, but again, found support. Second time we found support at that 50-day simple moving average, showing pretty positive action again as we kind of just pulled off of there, couldn't close below it. But overall, rough day Thursday. Things were not looking good. And we kind of continued that on Friday. Big gap down Friday, straight through that 50-day simple moving average. Really not looking good. But what ended up happening was we again saw one of those upside reversals. This one was an upside reversal to close actually up for the day. And again, for the third time, finding ourselves closing above that 50-day simple moving average. So 3 times within the last week and a day, testing that 50-day simple moving average intraday, closing above it actually at the end of the day. So really seeing some support at this 50-day simple moving average. But overall, this just in general, when we take a step back, right, it's been choppy. It's been very choppy. Like, you can honestly say the chop has really been going on since the end of September. And I think most of you, when you look at your portfolios and see how your performance has been, will see that's kind of about when your portfolio started to kind of flatten out, if not even just kind of go on a little bit of a decline, because even after this rally, we've just kind of traded in this range for a while. This kind of big rally looked really promising, and then we rolled right back into that kind of range bound area. So let's look at the weekly quick. There you have the weekly. So 2 down candles in a row. Again, you can see that test of the 10-week moving average. The NASDAQ was closed in the 40.94% range for the week. But again, overall, that trend is up. Overall, that trend is up. So just jumping back over to the daily, let's just kind of sit and talk about really, as we always do, those key levels. On the upside, I'm really keeping an eye on this 10-10 high. I know, like, we've had a lot of action above here, but like, we broke out to that side. We've traded very much in this sideways action. Like, this is the first level that I want to see us kind of maintain above, because we've struggled to hold above that area. The next is the 21 EMA, which is just about above that 10-10 high. And then you also have the 10-day simple moving average, both of which are on a downtrend. And then from there, it's really all-time highs. And then I would also say kind of keep an eye on this area right around here, this was that 23,600-ish area. You can see we've kind of failed to get back above there. We've had a couple intraday tests, but for the most part, things have really failed to kind of stay above that level, and it was an area of prior support. So you can kind of see that line. We pulled back to there, found support, rolled over, and now we're kind of resisting that area. Much shorter term, not as a important level, but just something to keep an eye on. On the downside, we talked about it. The 50-day simple moving average has been a strong area of support in terms of the closes. That is the key level to watch. If we can close above that and continue to close above that, even though it might be a bad environment, the overall uptrend, I think, is going to be somewhat healthy for the short term. The minute we close below that, things might get a little more ugly. So just keep an eye on that. Other than that, you have 3 levels. You have the 925 low, you have the 1010 low, and 1014 low, all coming in right around to that same price point right here, which is about 22,185. 3 times we tested that. If we get below there, that's going to be that first lower low that we've created in this overall uptrend. That is also going to be pretty ugly. So really on the downside, the overall market is still in an uptrend. But if we get and close below that 50-day, and we close below this kind of level right here, to me, we're probably marketing correction at that point. If IBD doesn't switch to that, I think, that's at least how I think most of us are going to look at it, and be looking for a follow through to come around there. Other than that, we'll look at the S&P quickly. Not much else to say, though, to be honest. Really similar action. Very similar. You can see the same price levels and kind of same things going on over there. S&P closing, let's see, 39.11% range, and the Dow is the 18.13% range. So all of them closing in the bottom half for the week, as you guys can see. All right. Other than that, nothing really else to say here. Let's jump over and take a look at Deepvue. Just pull this up for you guys. Sorry, I do see that you guys don't see this right now, so stay by. 1 second. There we go. All right. Everything's moving around on you guys. All right, there we go. Whatever, that works. You guys can see what's going on now. All right, so let's jump over to our theme tracker and let's take a look at the themes. Big thing that I'm noticing, the miners, rare earth minerals, gold, silver, they showed some strength this week. They've been bigger performers for the entire year. In the last week, they have taken some damage. In the last month, they have taken some damage as they kind of have corrected. But I think overall, we know this is a longer term relative strength, longer term uptrend. We know in the most recent week, this is outperformed as the overall market has looked pretty ugly. It's just in that 1 month time frame, almost like it's digesting those gains. So still keeping an eye on those miners and rare earth minerals, healthcare, biotech. That has been one of those really, really strong groups and industries and themes that has continued to show progress both on the weekly, on the 1 month, climbing its way up on 3 month, and eventually could make its way up year to date if it can have a really, really strong close to the end of the year. But keeping an eye on that. Solar and semis, though they did not perform that well, they are still worth noting that I think they are holding up. They are holding a little tighter than a lot of the other things that happen over the market. So just overall relative strength. So maybe not performing the best, but just relative strength. And the banks also doing fairly well. We'll quickly look at the ETF tracker. Let's just kind of reset this. This is a curated list of ETFs that I personally use to really just look at the overall market, industry groups, themes, sectors, everything, and like to have those charts attached to it. So let's just look right now at this RS over the last week. Here, again, rare earth minerals. And this is what I was kind of talking about. And this is why I like looking at the chart. So even though it didn't do well in the 1 month time frame, it did well in this current week, as you can see here, right? We're in that overall uptrend on those rare earth minerals. It's almost like we are forming that kind of bottoming of this base. And this is why, even though in the 1 month it hasn't been doing well, it's in the stronger uptrend and it looks like it's starting to form that base. The same thing kind of goes for the gold. Gold miners that was the only trade that I took this week. Closed it out by the end of the week just because of how the market was acting, but honestly didn't really have to. I was just being a little more cautious with all the chop that's going on. But yeah, really seeing this kind of cup with handle type of formation over here on the gold miners. Here, you're starting to get into a lot of that alternative energy, lithium batteries, things like that. Here's your silver miners. Oil has been definitely showing a lot of strength too. Silver, and there's your biotech. And yeah, a couple other industries you guys can kind of see on top. But again, the main reason that I like using this is it gives me the opportunity to just see what's the overall trend and what is the current action on daily. Looking at the same way I look at a chart, are we start to maybe base and form a second leg of an uptrend? Are we coming out of a stage 1 downtrend, maybe making our first turn to a stage 2, similar to Stan Weinstein's stage analysis type of look at things? These give me a way to give chart views to a lot of what's going on over here. And for those of you who don't know, I am a Deepvue partner. I use this for all of my stock screening and all my analysis. Really, really love this. This allows you to click and actually see the names that are in each one of these groups too, but it makes things a lot easier. The screening in this tool is amazing. There's so much more that they have coming out to this soon. Right now, I've heard the waitlist should be opening up very soon. So if you're not currently on the waitlist, there's a link in my YouTube channel in the description. On X, there is a link in my bio. You can sign up for that waitlist. There's also a discount code for annual memberships there. And I also do onboarding calls for them to help you guys get set up with this tool to make sure you have everything you need to use it in your trading. All right, let's just go and let's just talk about exposure levels, right? This is clearly a choppy market. Like we had said, I think most of us are seeing towards the end of September, beginning of October is when our portfolio has, for many, I think, just flattened out. But for a handful of people, starting to get that kind of choppy action, chopping them up if they continue to trade heavily, seeing somewhat of a drawdown. This is just continuing to just be that choppy environment. This is continuing to be a time where you do not want to force trades. You don't want to take a lot of positions. You do not want to take big, heavy positions, at least from my perspective. If you're going to take trades, like I did with AEM, I personally am taking small positions. I am only taking top tier setups that look really, really good and that can give me really tight stops. Moving my stops up fairly quickly, sorry. And though I know that means with this choppy environment, I may get stopped out a lot of times, break even pretty quickly. I would much rather have that consistent, like make a little progress, break even, make a little progress, very, very small loss, make a little progress, small loss, make a little progress, break even, and see my portfolio kind of just flatline. That if this market does turn around, then I'm just kind of partially in there and I'll allow it to slowly pull me in the same way I would do if we had a follow through day. I would just slowly be putting on positions. I would allow the market to pull me in, see those positions work exactly the same way. And that's how I look at this. I know that that's not for everybody. Some people cannot mentally handle that constant make progress, see it go away, make progress, small loss, make progress, and just see those basically consistent losing trades, even though it's not really affecting your overall equity that much. It can mess with some people mentally. So you do have to trade what works for you. For me, it's very easy. I can see these things not working out and just be like happy the fact that I'm testing the market and it's not really hurting me. But for some people, mentally, just seeing that loss can be very difficult to mentally handle. And then they become more and more hesitant as this chop continues to take positions, feeling like this isn't going to work, this isn't going to work. And then when the market does turn around, they've given up and the market goes on without them. So understand yourself personally and how you handle the market. But that's just how I've been handling things. But again, this is not necessarily the top. People may be all over social media next saying, this is it. This AI bull market is over. We're going to turn over, roll down. This is a bubble, whatever it is, however people want to be talking about it. Nobody knows. I don't care who they are. I don't care how great their track record is. None of those people, even that have gotten to those levels, have done so by predicting. It's just not how the market works. So just keep that in mind. Do your routine. Understand the market can go either way. Understand those levels like we talked about where you really need to be able to switch because the trend is changing, because that's what we're doing. We're just trying to ride the trend. Right now, the trend is sideways. The trend is choppy. That is the worst environment for trend followers. Downtrend's great. You're either some people short in the market or most of us just sitting in cash. And the uptrend, it's when it's like the beginning of the year, it's super easy. Everybody feels like a genius. I think if you talk to most people in the end of April, beginning of May, till about the end of September, there are people thinking about quitting their jobs because it was just so easy to make money. You focused on just some of the leading groups. You bought most things. They tended to break out. And those are the markets we love. We love easy dollar markets like this kind of time frame, like I said, in the middle of the year from May to September was. But that's just not always how it is going to be. And the key is to now not destroy all that process that you made in that time frame, and to preserve that capital, both your actual capital and your mental capital, so that you have the ability in that next easy environment, because eventually it will happen, to just kind of capitalize on that. Other than that, focus on high RS stocks. Focus on the leading groups. Focus on the things maybe sometimes that are just trading flat while everything else is down. And that could be leading you to where those big institutions are not offloading their money, where they're holding their positions. And then when that overall market pressure relieves itself, you will likely see those stocks kind of turn around. All right. Chad, with the perfect timing, dropping a stock as we're about to see and look at some names. So let's jump back over to Deepvue. And Chad, you have mentioned this one before, I believe. Correct me if I'm wrong. APH. All right. So the question is, would it be bad idea to add on a 21-day reclaim? Or no, because it's still above. Or no, because it's still above the 10-week and choppy. So number one, I just how you mentioned choppy environments. I'm less likely to push things. I'm less likely to go heavily invested on a position, less likely to continue to add on things. So personally, for me, I'm not rebuying on a reclaim of this 21. Not to say that for some people they might say, no, absolutely, like this thing rides at 21. It looks like it kind of dropped below, shook people out, and then it's back up. Maybe it'll just continue uptrend. So that's for, you have to think about what your actual setup. For me, no, not in this environment. I would not be. With how this kind of pulled back with the volume. I know the way I have my volume set up, it's a little harder to see, but with the volume on that pullback being a little bit higher, with the fact that we have seen this choppy market, I'm not looking to add on a reclaim of 21. Really, on top of this, let's just see. Like this pulled back about 10%. Really, what I would like to see is some sideways action and some base forming. And I think one of the things that, and I've noticed I've done this in a lot of my early years and sometimes still tend to do this, is people see this, right? They see like a little bit of an upside reversal and they see a reclaim of the 21. They're like, it's going back in an uptrend. Like these stocks go up and down and that's it. When you really study a lot of these stocks, you see that there's a lot more stair stepping going on. So can this stock technically pull back to where it did and then continue straight upwards on a continued uptrend riding the 21? Absolutely. And some of the big, strong leaders do that. But what's more likely, I think, is you get these pullbacks and you've had this gain, you get this sideways digestion, you get a secondary base, and the market kind of does what it's doing, and then eventually this continues upwards. So the thing I would say is, don't be so quick to think if this reclaims the 21, it's at all-time highs and we're continuing higher. It can happen, absolutely. But there's a very high likelihood that this goes sideways, forms a base, and then continues. And then if that base forms, it gives you a little bit better of a way of assessing your risk, a little bit better of an entry point. And that's really how I look at these things. But again, given the environment, that would be definitely something I would not do personally. It's up to you. Jason wants to look at T-Rug. True Golf. I don't think I've seen this one. Small stock. That's why I haven't. Doesn't make my screens. Let's see. Interesting. Is this like one of those simulators? Tell you, talking about new and CANSLIM, I've seen these golf simulators becoming so much more popular. Like we have bars around here that are like what used to just be a regular bar that have simulators in there. I know people putting them in their homes. The technology has gotten way, 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 way better on these where they're actually, they even did, Tiger Woods had that tournament that he did off of these. So yeah, this is pretty interesting when you talk about the new. The first thing though to come up when I'm looking at this, while I'm looking at my cursor, is you have earnings coming up in 5 days. So that automatically makes me cautious. The second thing, Stan Weinstein, right? Stage 4, very clearly in a downtrend. As a trend follower, the last thing I'm trying to do is catch a falling knife. There is nothing that says, oh, the stock's only $1.67. Like, how low can it go? If it goes to zero, it can go to zero. Even if this stock cuts in half and goes to, what would that be, like 50, like 70, even if this goes to like 80 cents, that's a huge, huge loss. And as you've seen, this is a pretty high ATR stock, 12.73%. So this thing can move pretty quickly. So keep that in mind. Now, from a fundamental perspective, from just looking at overall the company and what's going on, like I said, I've seen this become very popular, right? So you might be seeing these all over and be like, wow, this could be the next big thing. You're looking at, specifically on the bottom, I'm looking at the annual earnings. Actually, here we got the annual earnings too. Actually, let's see. So we got daily here too. So we're seeing decent earnings, right? We're seeing some institutions pour in. We're seeing decent industry group rank. ROE is just absolutely ridiculous. But this is just, it's a downtrend. It's also a very, very small stock and a high volatile stock. So it's not the type of thing that I would play. But just from a pure, putting all this aside, from a pure technical standpoint, we are below the 50. We are actually below the 21. We're below the 10. We're below the 200. This is in a clear, undebatable downtrend. This will give plenty of time to get into this. And if it is going to be a big winner, there will be, even if this goes to 50, there will be plenty of time to make money in this. So just not the type of thing that I trade. But I do appreciate you dropping that one in here. All right. No problem. Anytime, Jason. All right. Newegg. This is one of those a lot of people I think were watching, right? This thing ripped. Based, it started trading so tightly around the 50. It had this big 40% up day, and it was starting to trend upwards, and it looked like it was forming a pattern, and now it had a couple of big down days. This is one that I am watching. It is a high ATR stock, but this is like the first big base that this has formed. It has been completely bucking the trend of the overall market minus these last 2 days. It is a high ATR stock. This is just one of those things that I would be interested if I can get a really, really tight stop on a stock like this that I'd be willing to take. Like if I can get something where it's trading this tightly, where I can easily cut to a very, very small loss on a high ATR stock, this is one that I've been interested in. AMD is another one that has just really, really tightened up. It had this big gap up. It's gone on a pretty good run this year. Then kind of based out, gapped up, looks really, really strong, flagged, moved, rolled over, and just is kind of hovering. So this is a name that I'm watching very closely. And again, if you guys have their names, I'm just kind of clicking through some stuff. Lyft, this was brought up actually by Chad last week. This made an attempted breakout, but again, choppy market. Right, we break out, we make some progress, and we pull back. We pulled back on light volume. This had a ton of volume on the right-hand side. So this looks as if it is almost squatting. It hasn't even broke that 10-day simple moving average. So we get that high volume breakout. Now it's kind of just healthily pulling back, digesting that bigger move. Strong relative strength. This is a good fundamental CANSLIM stock. It's in an early stage uptrend. Standline seed stage A analysis, 2A analysis. So this is one that I'm really, really watching closely. I had mentioned the miners. I took a position on AEM over here. We kind of, and Chad, if you're still in here, this is a little more of, Chad, let me know if you're still in here. And I'll talk what I was going to, well, actually, I'll say this anyway for anybody who's watching. This is a little bit more of what I look for when somebody says, oh, this retook the 21, right? You could have this pullback right here, right? And you could say, well, I want to enter again when we reclaim the 21. And let's say it did. But a lot of times these stocks are going to just digest this a little bit further, right? They're going to digest this a little bit further, and they're going to go sideways, and they're going to form a base. This is much, much better for me. And this is where, as we reclaimed that 21 right here, I put a position on. And it gave me a tight enough stop. I forget where exactly I got in. It's like a 5. I think I had, yeah, it was. It was like a 5% stop. So it gave me a tight enough stop that I was willing to play this retake of the 21 inside of the base. And then the goal was, if this was to hopefully break out, form a more traditional base, I'd be willing to add on to it. So that's more of a reclaim of a 21 that I am willing to take because I can assess my risk tighter. It has the ability to digest those gains, doing what is more likely that stair-step pattern that most stocks tend to do. This is holding the 50-day. This industry group has been performing well, something that I definitely want to keep an eye on. NEM, this is basically did the same thing. I just went with AEM because I off the top of my head, I believe my stop was just able to be a lot tighter. Yeah, my stop was just able to be so much tighter, so that's why I played that one. But this was another one that did that kind of breakout. This is another one that's showing relative strength in that group. Keeping an eye on that. This I didn't update from the week. I know Guardian Health, big gap up, holding above those gap up lows. Hopefully this can go sideways, digest gains, and get a nice setup. Keeping an eye on that. Another one, right? This could be possibly Clear. I've been watching this for years since I seen them in the airport. Being that everybody and their mother was getting TSA pre. I was like, well, something has to happen, that somebody's got to make it in some sort of way to kind of be a one step above that. And that's kind of what Clear does. Gone through that IPO due diligence phase, really, right? So we've kind of had some time for those big institutions to see how this company performs financially. What I like here is you had the big base here. And we're seeing on the weekly chart almost like a big giant cup with handle. But then when you go zoom in on the daily, we have, again, a smaller cup with handle forming. So this is a name that I really am watching closely because of the fact that you have that multiple time frame setups and really in that early stage of move. And look, annually, this has got some great earnings, good sales. Quarterly, not amazing. Big institutional funds pouring in there. Great ROE. This is a name that I am really, really watching closely as well. All right. Nobody else really has any names that they've thrown in here. So let's finish this off. Final thoughts. Be patient. I think that's the biggest thing. Really, really sit back, be patient. We all want to trade. We all want to make money. It gets very, very, it gets very addicting when you're in the market that we had going from May to September, where it's just like you're buying stuff, you're making money, you're taking profits, and it feels nice, easy, and for lack of a better term, it's fun, but that's just not how it always goes. And I know for a lot of new traders, it can be very disheartening to go from that environment to this environment. And that's where I personally have had that happen. And I had a 40% drawdown in a choppy, it was a longer, choppier period, but it was like multiple months. But I had 40% drawdown over like 6 months because I was forcing things. I didn't understand that I was in a choppy environment. I was still buying, good stocks. I was buying setups and breakouts that were good, proven, setups and breakouts. But I just didn't understand the environment that I was trading in. I still kept my max stop loss, which at the time was like a 7 to 8% because I was a little bit more of a position trader. And and I got death by 1,000 cuts. So just understand there's times where we're going to push on the gas. There's times we're going to be a little bit more patient. This is the time to be a little bit more patient. And the market will give you time. The same way we were just saying with Chad, how the market isn't going to turn around and there's going to be no opportunity and you're going to miss everything. Even in what was a lockout rally in this year, there were still names that could have been bought. Maybe the leaders never get an opportunity to jump back in, but there were plenty of other names that did well, and there were plenty of other stocks that broke out later on in the clear uptrend. Like Quantum was one of them. Quantum didn't break out until months later, but the market was doing well and it did well. So just don't have that fear of missing out where you're like, if I'm not in the market when this turns around, then I'm left with nothing. You have to understand there are names that are going to move on without you. There are other setups that are going to happen after the fact. If this is going to be a strong market, if it's not going to be choppy, if we're going to have that sustained uptrend, there's going to be plenty of names out there. You could see the same people trading almost the exact same strategy, and you take a group of 10 people and you'll see sometimes 30, 40 different stocks and maybe 10 of them all being strong, super performing stocks. So make sure you just understand that in your head, that you're not constantly having that fear of missing out causing you to force things. There will be plenty of time to make money if the market environment is correct. All right, that's all I got. Appreciate the turnout because I kind of did this last minute. I didn't give anybody heads up. So thank you guys. A little bit crazy of a weekend, but that's all we got. YouTube, You guys have the X account up there. X. You guys have my YouTube account up there, where these replays are all posted, and it's easy to actually go back. This is episode number 29. Yeah, 29. So you can go watch all 29 of these throughout this year and see how I was talking about things if you'd like. Discord, link in the description. Great community. Over 1,000 position traders, swing traders, all trend following traders in there. And really great community of a lot of really nice people. Some people even on the professional level that are willing to help people out. And it's all free. So, and then my email if you'd like to reach out via email. If you want my ETF theme tracker, just send me an email, and in the subject just say send me theme tracker, and I'll send you the Excel sheet where I have broken down all the ETFs, what that ETF is tracking, and then I also have those ETFs split up into bigger sectors on different tabs, so you can kind of see things organized and put it into whatever platform you'd like to put it into. That's all we got. Deepvue, if you like Deepvue, you guys know, link in the description of here and link in the description on X. That's all I got. Appreciate everybody joining. Enjoy the rest of your weekend.